All right, now we're going to talk about targets. Okay, so we're going to use our Heikinashi. Our Heikinashi is our target support and resistance. You know, your stop loss and your take profit are to be based on your Heikinashi chart. So this candle right here, we can consider a support. Now, if you look back over here, hang on, we're going to do this. We're going to go with horizontal line. We're going to make that. We're going to make that support. Now you'll see that that line has we've maintained. We got a lot of activity in this range here, right? No matter how far back I go, that's a safe range. Now, this will be a target range. So if you enter a trade, your stop loss and your take profit are the previous doji candle, center of the doji. If you really want to be safe, you're going to do the top of the doji. Okay? Now, you may, because we're trying to extract small pieces from the market, you may end up closing before you hit your target. But these are your targets. Let's go here. Let's see here. It's really that simple. That doji candle, some people call it firefly, that candle in which the indecision, that's your next target, and that's where your stop loss. Now you can either set your stop loss any range depending on your risk appetite. Your stop loss could be just above it, which means you're probably going to get stopped out more often than not. It can be, see that, just above it, or it can be just below, or it can be the center. So if we were taking a buy, that's our target, right? Now if our stop loss was here, we'd already been stopped out. No, I'm sorry. That's our target. The stop loss was at the top of that. We'd already be stopped out. There's our, we got stopped out on that one, right? But now again, we didn't enter because we didn't have the. This is not a lesson on entries. This is a lesson on deciding when you do enter, where should you place your stop loss, and where you should place your take profit. Bottom line is you have risk control, right? So if you took that trade and you made this, you'd be out of this trade before it took this bigger move, this more solid move to the downside if you were in a buy. Now if you're in the sell, if you took the sell indication, then your take profit, your stop loss will be up here. Let's just make this the stop loss. Let's do this. And let's see where would your take profit be from here. Your take profit would be, this is the first clean doji that I can see. That's my take profit. Now your ratios are clearly off. There's clearly bigger risk than, so, I'm going to watch, even if I took that trade, I'm going to be really mindful. But the big news is, guess what? That went out. See, there it is. Now watch and see. So what you don't want to do is you don't want to go all in on any one position, especially, and that is what the brokers, that's what the other side's counting on, you going all in. I'm telling you right now, do not go all in. until, no matter how good you think you are, no matter what your gut feeling tells you, do not go all in. That is the lesson. And by doing it this way, you've managed you've kept that loss small, right? It's easily you can recover from that loss in a couple of small wins. And don't let that disturb you. Sometimes, the best way to change your confidence level after a loss is to go in for a couple of small wins. All right? So, look at that. See? Now you know that this is the mark that you really, that this candle right here proves that that's the mark that you want to be on. Here we go again, a little shy. Got 4 seconds, 3 seconds to the end of this candle. Look at that. Now, let's just watch this downside. Now my volume footprint over here is telling me that I got pressure to the upside, right? Here, I'm going to bring this over and see I upside pressure. Guess what? If I took the sell here, I'm not losing. I'm not going to be in this extension, which more likely that extension is going to go here. Next doji to the left. There's my volume footprint to the downside. Now again, we're going to go with you got discretionary targets depending on your risk appetite. Let me go here so we can see that a little bit better. So on this doji here, you've got center, you've got just below, you've got the bottom of the wick as far as targets go. Now if you were using that as a stop loss, if you took that sell and you made that your stop loss, you would have had to ride out this emotional roller coaster of the pullback, but then you would have been safe for this sell. All right, now we're back to where we started. Now we're going to watch this as our target again. Let's see how it holds. Now our VMax is giving us a downside signal right here, and then also downside signal here. Failure from this high, failure. So we're probably going to get a significant drop right here. All right, we're calling that our significant drop zone right here. We're still got our eye on this target for initially, based on our doji back here to the left. Let's see how we go here. Have you noticed this block here? There we go, orange. See, it was in the gray. That's a neutral. So it's uncertainty was going to play there. Now we've got a little more confirmation for more of a drop. Let's see where we go. Again, doji being a significant entry point, significant level right there. A little downside pressure on the volume footprint side. As you see, these levels keep coming into play. This level here, and this range here have all been part of the game. And I don't have to find highs and lows. I just simply use the Heikinashi candle and dropped to my first doji and my second doji to the left. And now I've got my so now it's not a matter of perspective. It's not a matter of which high or which low. It's just there it's in the framework. Don't make it overcomplicated.